Yes, sir.
Second.
Second.
Moved and seconded, all in favor, signify by saying
Aye.
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 Motion is carried. Agenda is, all right, Mr. Harper.
Yes, sir, Mr. Chairman. The investment item on today's agenda is for Brookfield Capital Partners, and Mr. Alexander Campbell will give a presentation to the commission, and this is for consideration for approval for an investment mandate.
Right. This is a recommendation for a $125 million commitment to Brookfield Capital Partners 4 global buyout strategy targeting value investments in middle market companies principally located in the United States and Canada who are experiencing some form of distress. Additionally, the mandate allows for up to 30% of the assets to be invested internationally in Europe, Australia, and Brazil, where the parent company, Brookfield Asset Management, already maintains sizable operating presence. I would consider these to be relatively LP-friendly terms. You have European waterfall, you have a clawback guarantee by the parent company, in addition to 100% management fee offset. Additionally, A&I Hewitt has given this fund a buy rating. You'll recognize this chart. This is our current and targeted exposure to the private equity asset class. An investment in BCP4 would further our efforts to increase exposure to the buyout space relative to the others. Brookfield Capital Partners is a Toronto-based fund. They are owned by the parent company, Brookfield Asset Management, which is a publicly listed company and has over 700 investment professionals and 28,000 operating professionals globally across all of the platforms and portfolio companies. It operates platforms in real estate, where you may recall a recent investment by RSIC in the BSREP 2. In total, we have about $275 million in commitments to their real estate platform. They also have platforms in infrastructure and agrilands, in addition to their public securities business. In total, they have a little over $200 billion in assets under management, which, to put that in perspective, is larger than KKR. It's larger than Carlyle, and it's about 2/3 the size of Blackstone. The PE funds have invested a little over $2.4 billion and maintain offices in Toronto, New York, London, Sydney, and Rio. BCP has been investing third-party capital in the private equity space since about 2001. But they've been investing globally, their own balance sheet money, for the better part of 100 years. I would point out to you here that these returns are as of December 31st. Additionally, you may notice that the first two funds here are denominated in Canadian dollars, and that's attributed to the fact that the majority of their investors back at that time were Canadian. You also will notice that at times contributions may exceed the fund size, and this is attributed to their ability to recycle capital for investments that have been realized within 18 months. This is how it compares against its peers in the benchmark data. Green boxes are where the Brookfield returns fall relative to the quartiles. You can see Fund 1 is a 2001 vintage with $517 million invested and is first quartile across all metrics. Fund 2 is a 2007 vintage with $1 billion invested and is nearly first quartile across all metrics. Fund 3 is a 2011 vintage with $930 million invested to date, and it just recently exited its investment period, so it's a little early to draw any conclusions about how it's going to perform relative to its peers. I would also point out here that the benchmark data is as of September 30th. That's the most recent benchmark data that's out. New benchmark data literally should be coming out any day. But I would point out that in the interim, they have increased their distributions to over 50% of the invested capital. This is how the prior funds have compared against the private markets. As you can see, funds 1 and 2 are well out in front, and again, Fund 3 just exited its investment period, so many of the value-add activities have not had an opportunity to manifest themselves yet. So why do we want to invest with this manager? Number one, I would say their investment flexibility. BCP targets control investments via equity investments, originated loans, for buying the debt of primarily middle market companies. This capital structure agnostic approach allows the fund to invest up and down the balance sheet opportunistically and establish an investment entry point that provides the optimal risk-reward profile. Point number 2, Brookfield Asset Management will be the largest LP in the fund with $1 billion committed, which demonstrates their commitment to better align themselves with the other limited partners by having more skin in the game and therefore increased interest in seeing the fund perform well. I would clarify that this $1 billion is from the parent company and not from the investment professionals in BCP. However, BCP professionals, like all the other platforms under BAM, have a lot of their net worth tied up in the parent company and are largely compensated based on how the parent company performs. Point number 3, the operational expertise. Expertise in operations is vital to a turnaround strategy to create value in a struggling company. BCP's operations-oriented approach leverages the expertise of its 16 dedicated operations professionals with an average of about 31 years of operations experience. Where BCP ultimately gains control or significant influence over a company, it looks to drive value by crafting operating efficiencies within the company or through synergies between several other companies, which takes us to the final point here. The broader Brookfield platform will provide a competitive advantage in generating investment ideas, sourcing transactions, conducting due diligence, and executing on value creation opportunities. For example, BCP will gain market and consumer demand insight into an energy company through its infrastructure platform or into a company with sizable real estate assets or services through its property platform. Some of the considerations that we looked into for the fund, as to the global expansion outside of the United States, the broader Brookfield entity already maintains a sizable presence in Europe, Australia, and Brazil, and has been investing globally for 100 years. Point number 2, the increase in fund size. We think that because of the mandate, which allows up to 30% to be invested globally, in addition to the fact that $2.3 billion in co-investments were done alongside the fund in Fund 3, that the jump in fund size is closer to 60%. Additionally, BAM has increased its commitment into the fund from $350 million to $1 billion. Fund 3 also had just 8 investments, which is a relatively concentrated portfolio. Fund 4 is targeting up to 15 investments, which should add a little bit increased layer of diversification, which they should be able to handle since they brought on an additional 14 investment professionals since 2012. Number 3 is the 3 realizations in Fund 2. We were able to get comfortable with this because the bulk of Fund 2 was invested in 2007 at the peak of the market and just prior to the financial crisis. And like many other PE firms, it was affected by the downturn in the economy. Despite all that, they were able to return over 100% of invested capital. They are nearly first quartile across all metrics. The remaining assets in the fund are largely exposed to the Canadian and U.S. housing markets, which are recovering, and the manager expects additional realizations over the next 12 months. There were 4 instances of related party transactions in the prior funds, and we believe because Brookfield has a formal and transparent process, which includes having to get permission from their own internal conflicts committee, and more importantly, having to get approval from the Limited Partner Advisory Committee before any of these transactions can occur. I would point out that we have been offered a seat on the Limited Partner Advisory Committee should we follow through on this recommendation. Independent directors will conduct the transactions. They will seek outside valuations. And in prior cases, several of the transactions involved publicly listed companies, so they were already under the purview of the regulatory bodies. This was all verified through a reference call with an LP that was a member of the LPAC in Funds 2 and 3, which also be upping into Fund 4. Additionally, Aon Hewitt and our own internal RSIC reviewed these transactions and were comfortable with the processes that Brookfield has in place. So, in conclusion, this is a recommendation for a $125 million commitment to BCP4. Take any questions that you guys have at this time.
Well, what is the total size of the company?
They're targeting $3.5 billion with a hard cap of 4. They have closed on almost $2.5 billion at this point.
On the $1 billion that the company will put in, I read the LPA, and did I understand that investments that they may own right now, that they later sell to the partnership, would be part of that committee?
I do not, I'm not sure if that's the case.
I think it's the case that we guarantee an 8% return.
They've already made several acquisitions that will go into the fund. It will go into Fund 4, and they have not been fully realized yet. They've reached agreements, but there will be an 8% annual fee that would be tacked on top of that, which is one of the reasons for us to try to expedite getting into the fund a little bit earlier. If that answers your question.
Yeah, kind of. I read that as, well, a couple of things here. It's been a while since I read one of these, but I have read 4 or 5 of them. This is one of the more complex ones I've read. And there were sentences, and what Robert had been attorney, there were 10, 12, 13 line sentences that told us something, and we tried to break them apart. We couldn't figure them out. And it looked to me like they were, for every one of the things that we mentioned, there was a lot of leeway in a different section, such as I saw, and they did call them, whatever the term was you just used.
The related party?
Yeah, well, they were related party, and that wasn't in the related party section. It just says that their commitment could be in investments that they already own. And so, you know, I'll look at those things, and in a good times, I think that's fine. But when it's in hard times, you can imagine where a partnership is going to be looking very keenly to find an avenue for sale.
Right, and in any related party transaction, anything from their balance sheet that would be possibly sold to the fund, it has to go through their internal conflicts committee, and it has to gain majority approval of the LPAC, which we would have oversight.
Is that true? Is it only over a certain percentage of the category? You know, let's say 20% of this, 30% of that?
No, sir, not to my knowledge. Now, they do have restrictions on an individual investment size at 20%, with a one-time exception where they could go up to 25% of the fund, but that doesn't relate to anything coming in off the balance sheet.
Well, you're not a lawyer either, am I? I read it, I can't explain it. I didn't have much time to make the kind of notes. But I want to say that I'll vote against this, and I'm not going to get much traction, so I'm not going to belabor the point. This is a convoluted document, and it literally, of all the documents I read, this gives them all the power. And they talk about advisory committees and things, but just as often as not, they go in the back and take a lot of that away. And it's just, this is a pure document of trust. And I know that y'all feel that good about this company, but I just want to lay it out here and start with. It's a document of trust. In good times and in bad times, it's just what it is. I'll be quiet now. Thank you very much.
Yes, sir.
I had a question about the capital structure. I noticed in Fund 3 that a bunch of the investment was in the form of debt.
Yes, sir.
And what does that mean in terms of getting control of these companies that are investing in?
Good question, and I can kind of walk you through the process. What they'll do is through research, they'll source certain investments where maybe the company is going through some form of distress, and they will make a loan to the company that they originate. And oftentimes what they'll do is they'll syndicate the senior piece off to the market to sell it to someone else, and they'll keep the spread there that they maintain, and then they will also retain the junior tranche, which they've identified as the fulcrum security, which means that it's going to be the security that would be impaired through bankruptcy. So they can therefore drive the restructuring process. And when they go through the bankruptcy, it will come out owning a sizable portion of the equity, and usually a controlled position of the equity. And that's how they will go through the debt side to get into the equity side. Now, sometimes these companies will rebound and are able to pay off the debt early, and BCP is fine with that. These loans have typically higher coupons because you're going to lending to distressed companies. So not only will you get your principal back, but then with prepayment and make-whole penalties, it will recoup all the interest they would have earned on that loan over that several-year period.
Thank you. And the second question is, you get the sense that there is sort of a decreasing marginal profitability in the private equity sector, so that over time, as the total assets involved are larger and larger, that the profitable opportunities begin to shrink.
I think it's somewhat of a philosophical question. I think if you look at the returns of some of the mega buyout funds, they're a little bit more capped up here at the top for outperformance. You're a little bit more capped at the bottom as far as your security blanket. But you're going to, when you're lending to more middle market companies, which they are doing, you're going to have an opportunity for larger returns. So I would say that is correct. Is my opinion, that would be correct.
Do they have any preconceived strategies as far as geography is concerned, or are they just looking at the whole spectrum?
They're looking at the whole spectrum. Only 30, it's still going to be 70% or more in Canada and the United States. They can invest 70% or more. They can invest up to 30% outside in markets like Europe, Australia, and Brazil, where they already have significant operating presence. So they can do more than that in Canada and the United States. They want to do 80%. They can do that. It's going to be wherever they can find the best value opportunity.
But just to be clear, outside the 30% outside the U.S.
In Canada.
And Canada, that can be, would you say, would be limited to Brazil and?
Yes, sir. Brazil, Australia, and Europe.
Okay, all right.
Europe's a little bit broader, obviously.
China,
Right.
India, places like that. Okay. Are there any other questions? If not, yeah, we'd like to have a motion to go into executive session, and executive director will read the motion.
Yes, sir. A motion to go into executive session to discuss investment matters pursuant to SC Code Section 9-16-80 and 9-16-320, and receive advice from legal counsel pursuant to SC Code Section 30-4-70, subsection H.
Have a motion?
Second.
So moved. Second.
Made, seconded, all those in favor, signify by saying aye.
Aye.
Aye. We will now go-
Ed, can I ask a quick question before we go into executive session?
Yes, Al.
All right, I'm in the car, I'm on my phone, I'm not on speaker, but I'm not in the car alone, so I didn't know if I need to drop or if, how we needed to handle, or I just put it on mute and not speak, or, but I wanted to make people aware that I do have other, my business partner in the car with me.
As long as nobody else can hear and he doesn't say anything.
Yeah, Alan, as long as nobody else can hear and you don't relate any information, I think it's okay.
Okay.
All right. Okay, we'll now go into executive session. We are now back in open session. And we'll back with you. The recommendation group.
Yes, sir. Thank you, Mr. Chairman. Investment recommendation for Brookfield Capital Partners for LP. One, subject to the terms discussed in executive session, adopt the recommendation of the CIO and the Internal Investment Committee as set forth in the terms chart on page 1 of the diligence report dated June 18, 2015, regarding Brookfield Capital Partners for LP. Two, authorize a commitment not to exceed $125 million to Brookfield Capital Partners for LP. 3, authorize the chairman or his designee to negotiate and execute the necessary documents to implement the investment as approved by the commission. 1, upon document approval for legal sufficiency of RSIC Legal, and 2, upon expiration of the 3-day business review period as approved by the commission on May 1, 2014. 4, as the review period may be amended or superseded by the commission. And 4, authorize the chairman and or the CIO or the designee to thereafter authorize the custodian of funds to transfer such funds as are necessary to meet the obligations of the South Carolina Retirement Systems Trust funds with respect to the investment.
May I have a motion to approve? Second?
Second.
Any discussion? No discussion? All those in favor of the motion, signify by saying aye.
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 Opposed?
Did we have both?
Yeah.
I was not able to.
That's, I don't know.
Alan Reynolds, were you and I on?
I said aye.
Okay, Reynolds?
Yeah.
Okay.
Okay.
You have one
Thank you.
negative.
Thank you.
So the motion is carried. So is there any
Is the motion?
Is there any, if there is no other business to come oh, I thought you had said. If there's no other business before the commission, let's have a motion to adjourn.
So
Second.
moved.
All in favor? Aye.
Thank
We are
you.
adjourned.